Welcome to the Thursday edition of the Tech Stocks Daily Podcast. Today we're diving into some major waves rocking the tech market. We'll explore how Microsoft hit an all-time high on the stock charts, fueled by its strategic plays in AI and cybersecurity. Plus, we'll discuss Microsoft ghosts of leadership past making enlightening cameos. Meanwhile, CrowdStrike's Falcon Flex shows us how subscription models can create explosive growth in any market environment. And don't miss the scoop on Apple, whose services division lights up otherwise dreary headlines with stellar revenue, even as it navigates the tariffs jungle and manufacturing grumbles. Stick around for insights, laughs, and a few strategic takeaways to fuel your inner tech and investment guru. Lights, camera, tech tie-in. Today we're diving deep into the world of Microsoft, the tech behemoth that continues to make waves in the industry. If Microsoft were a movie, today's headlines would definitely make it an Oscar contender in the categories of stock market highs, cybersecurity dramas, and what not to do cameos from past CEOs. First, let's talk about breaking records and leaping over stock charts like an agile ninja. Microsoft hit an all-time high with its stocks reaching $469.65 before closing slightly lower. And yes, they kind of did this on the sly with no company-specific news to ignite such fireworks. Mega-cap tech stocks like Microsoft, especially those orchestrating revolutions in artificial intelligence and cloud computing, are riding a bullish wave thanks to strong corporate earnings and an enthusiastic market embracing AI-driven growth. Moreover, Microsoft continues to expand its reach into cybersecurity, aggressively beefing up its security footprint. The recent introduction of the European Security Program offers free AI-based threat intelligence sharing, showcasing Microsoft's strategic impact on the cybersecurity scene. But wait, it's free? Well, yes, but this move cleverly helps Microsoft cast itself as a trusted security ally across Europe, hoping to rake in future commercial opportunities. Now, that's a superbly strategic plot twist, putting Microsoft at the forefront of AI-driven security solutions, while competitors like CrowdStrike and Palo Alto Networks grapple with differentiators without the kind of integrated cloud prowess Microsoft comes packing. Fiscal projections are looking downright zesty too, with a projected 13.47% year-over-year revenue growth. I guess good things do come in 13s for Microsoft, or is that the new lucky number? Microsoft's strong balance suggests they've got a formula for success that continues to dazzle industry watchers and investors alike. And speaking of dazzling, here comes the ghost of Microsoft past. Former CEO Steve Ballmer took the stage to candidly admit Microsoft's smartphone sector follies. With a touch of humility, he relived a miscalculation story during his tenure, where overconfidence led them to bet on Windows rather than embracing the need for platform-specific solutions. Such strategic blunders are costly in techland, contrasting sharply with current CEO Satya Nadella's forward-thinking pivot towards cloud computing and acquisitions. Even with a $3.36 trillion market cap, Microsoft is not just sitting back and sipping on nostalgia lattes. They're moving forward with a strong commitment to innovation and leveraging their assets without letting past failures affect future potential. Through highs and learning moments, Microsoft continues to be a tech giant worth watching and emulating, keeping its eyes squarely on a future rich with possibilities. Keep your popcorn handy, tech lovers, because Microsoft's show is one we've still got plenty to watch, and maybe some we might learn a thing or two from. Cue applause tracks, anyone? Hold on to your keyboards, folks, because CrowdStrike is making waves in the tech world today. This cybersecurity company, known for its innovative solutions, was buzzing across headlines today for a couple of high-impact reasons. First up, let's tackle the theor. CrowdStrike shares have been on a roller coaster of late, behaving exactly how stocks love to do, unpredictably wild. But why is this exciting? Well, it demonstrates a core principle of technical analysis regarding support and resistance levels. Yesterday, CRWD dropped to $445, hitting what folks in the trading world recognize as a key support level. Why? Because this level once acted as a resistance, and stock market savvy peeps sold at that price point before realizing, oops, maybe we'll want those shares back. This little price ping pong created support as buyers swooped in. And guess what? New support is setting up camp around 456, a super intriguing tidbit from the chart watcher's corner. But wait, there's more. Now on to the big impact star. This subscription model from CrowdStrike is spurring their annual recurring revenue growth, akin to a caffeine shot in the arm. At the first quarter's glance of fiscal 2026, they pulled in a wow-inducing $774 million in Falcon Flex account value, jacking the total account value to a mind-blowing $3.2 billion. What's sizzling here is the model's massive client uptake, showing a 31% sequential growth. Talk about some impressive number gymnastics. With Falcon Flex enticing more than 820 customer accounts, CrowdStrike's total ARR climbed to $4.44 billion, up 22% compared to last year. And the reflex transactions are becoming a big thing too. What are they? It's when clients have exhausted their initial Falcon Flex contract and are coming back for round 2. Heck, 39 examples of reflex transactions were disclosed last quarter alone. The ongoing traction of Falcon Flex hints that it might just be the magic brew CrowdStrike needs to hit a dreamy $10 billion ARR target. However, while things sound sweeter than software pie, there's a reason investors should keep their eyes peeled. Based on something called the Adisthana cycle, analysts recommend a pinch of caution. According to this framework, CrowdStrike is in its 8th phase, usually not prime time for a breakout. Historical patterns suggest salvation may come in phase 9, which kicks off in December 2025. Until then, wary investors might consider hedging their bets and waiting for a snugger entry point closer to the so-called nirvana level of $286.11. Whether you're a stock analyst or a cybersecurity aficionado, CrowdStrike's market gyrations and flex maneuvers offer a crash course in understanding how tech and trading worlds collide. Keep your browsers and speculation open as the tech saga continues to unfold. All right, tech enthusiasts, Apple made quite the splash in the headlines today, and here's why. First up, let's dive into Apple's stock performance. Since hitting a high note against the Magnificent Seven in late 2022, Apple's stock has nosedived 45%. Ouch. That's a tough break for one of the world's most iconic brands. It seems like the good times have rolled on for tech giants propelled by AI innovation, but Apple's been paddling upstream. Currently, Apple is down 17% year-to-date, no thanks to tariffs from the Trump era targeting China-made iPhones and draconian interest rate conditions. Apple's dependency on Chinese manufacturing has put quite a crimp on operations, sending the stock into underperformance oblivion, especially amid flagging excitement for iPhones. Now there's a gold lining within Apple's clouds, their services division. While hardware might be having a rough go, services are pouring in the dough with $26.3 billion in first quarter revenue, boasting shiny 75% margins. Analysts are eyeing this segment, expecting it to hit a whopping $180 billion by 2030. Quite the cushion for those not-so-rosy times, right? Switching lanes, the options trading trends for Apple reveal a fascinating tableau. Quite a few whales are folding some hefty cash into trades with a bullish stance. For context, 47% of investors leaned bullish, and 38% kept a bearish footprint. A classic tug of war, folks. Options trading whispers that movers are eyeing a price range of $190 to $230 for Apple, aligning with a general sense of optimism amidst the chaos. Analysts have thrown phrases like hold and outperform into their cauldron, pegging price targets between $225 and $270. Further embroiling Apple in lingering tensions is the US-China dynamic. Apple's soiree into AI land, particularly concerning a partnership with Alibaba, has hit quite the bureaucratic snarl in Beijing. It's a tangled mess influencing Apple's sliding grip on China's high-end smartphone market. 70% early 2023, now just 47%, while Huawei flexes with 35%. So, dear viewers, what do you think? Is Apple simply in need of a little TLC and investor patience to navigate these choppy waters? Or are there deeper troubles ahead? Is their robust service sector enough to buffer saggy hardware sales? Engage with us in the comments section, share your take, and join the conversation about this technology titan and its unfolding narrative. Let's hear it. What do you think the future holds for Apple? Drop your wisdom or comedic banter below, and let's get the discussion rolling. All right, let's zoom in on Microsoft for today's deep dive. So Microsoft's making headlines with its exhilarating stock market performance and strategic plays in AI and cybersecurity. With stocks soaring to an all-time high without any company-specific mind-blowing revelations, this mega-cap tech's momentum is largely driven by general market enthusiasm around artificial intelligence and strong earnings. Plus, their proactive expansions into free AI-driven cybersecurity efforts depict a savvy, chess-like strategic approach. With cosmopolitan growth projected at more than 13% year-over-year, and packs of investors cheering sidelines from the stock sidelines, I'd lean towards it for Microsoft. Why hold? Even though it's impressive seeing Microsoft playing a grand strategy with AI and cybersecurity expansions, investments in stocks that peak significantly without underlying news can tilt expectations just a tad risky. Their past flubs, yes, the smartphone drama led by Steve Ballmer, show they've got an eye for learning from their missteps. But investing just because the tide's high is a little dicey. The market can surprise like plot twists in your favorite TV dramas. And valuations like these should make investors pause and consider diversification in the midst of hyped valuations. Remember, every trader saw why holding tight debatably could play safe, especially when expecting broader fundamentals or looking for clearer dips. Take note, a prudent dip and buy strategy curates calmer financial waters, safeguarding against hyper-pumped inconsistencies in market flair. I encourage everyone listening to dive deep, each with aspirations for gains. So stretch your research wings and take due diligence into account while charting the investment seas. Be your finance captain, forging market choices with understanding tailored by insights personal to you. Today's tech market activity painted quite the intriguing picture. Microsoft wowed investors with its soaring stocks and impressive moves in AI and cybersecurity, solidifying its role as a strategic maestro in the tech realm. Meanwhile, CrowdStrike dazzled with its roller coaster stock movements and astonishing growth through its subscription model, Falcon Flex. Over in Apple's world, despite facing choppy waters with Chinese manufacturing challenges and tariff impacts, the resilient services division provided a bright financial cushion. For all our tech-savvy and curious folks out there, if you enjoyed today's dive into the world of tech stocks, don't forget to give us a thumbs up, hit that subscribe button, and share this video with your friends. Join us tomorrow for another roundup of tech's topsy-turvy market adventures. Keep those notifications on, you won't want to miss it.